Welcome to 5 critical things that strategists need to know about accounting. We'll start with 2 applied examples. The first is going to be manufacturing a can of corn, or a company that manufactures cans of corn. And the second is going to be Fresh Kicks, actually On Sneakers, the Swiss sneaker brand. We'll start with a company that manufactures cans of corn, a very simple company. The first definition is revenue. That is all the money that flows into the company. So number of cans sold times the price that they sold the cans. The second is cost of goods sold, COGS, and that is the physical inputs that go into making the product. So in this case, the cans, the corn, and in the case of a manufactured product, you include the labor for manufacturing as well. The third definition, of course, is overhead, or selling, general, and administrative. This is overhead costs like rent, marketing, leases, utilities, office salaries, administrative salaries, executive salaries, CEO salaries, etc. What's left over is profit. And I put that in air quotes because we're going to define profit a little bit better as we go through our presentation here. The fourth phrase is gross margin. So gross margin is equal to revenue minus direct costs, revenue minus COGS. Gross margin is also referred to as gross income or gross profit, and this is by far the most misused phrase in business. Now that you know the definition, be very careful when listening to other people. Make sure that they know the definition of the word that they're saying. We've got revenue and we've got COGS, so what must be left over is gross margin. Our fifth and final definition is operating income. Operating income is the same as net profit, or in Europe it's often called net result. And this is largely similar to, it's not the same as, but largely similar to EBITDA. There are some differences, and we'll cover that in a bit. I always want to phrase things in ways that you'll understand easily, right? We want to start with something that's easy and then build our knowledge up from there. So revenue is equal to costs plus profit. So our costs are COGS and SG&A, and our profit here is simply referred to as operating income. This is highly simplified. So revenue, COGS, SG&A, and operating income. So we've filled out our little diagram here. So here, operating income, and I'm going to phrase this in a way that you remember way back when, maybe middle school intro to business module that you did. So profit equals revenue minus cost. Operating income equals revenue minus costs. It's just that as we get more sophisticated, we have to start breaking these costs down into the physical inputs and the general overhead, COGS plus SG&A. Our second example is On shoes. Big fan of Roger Federer. I've actually never owned a pair of On shoes, but I certainly watched as he bought a pretty big slice of the company. I think he owns 3% of a $17 billion company. So this company represents a big chunk of why he's a billionaire. For On, they have a nice, simple statement of income. This is their equivalent of an annual report, a 10K here in the US. On is a Swiss company. And so we start, of course, with revenue. They call it, in this case, net sales. We have to use some common sense when reading a financial document because people will use different phrases, unfortunately. The second component is cost of sales. It's manufacturing, that's taxes, that's the logistics of getting the shoes from their manufacturing plant in Thailand back to Switzerland. Next, we have gross profit. So that's simply net sales minus cost of sales. SG&A, we need to add this to our expense list. So their overhead, note that they spend more on overhead than they do on the actual cost of their products. Very common in manufactured products like this, and I would expect to see the same thing with Nike. This is marketing, office overhead, executive salaries, administrative salaries, etc. It does not include R&D per GAAP rules, but R&D in this case is folded in as a subline item. And so, of course, this gets us to our operating result. What's operating result? European word for operating income. So the numbers should work out when we lay them out. We've got our formula. Operating income equals revenue minus costs, revenue minus COGS minus SG&A, and boom. The numbers, of course, work out just fine because these statements were prepared by CPAs or chartered accountants if it's over in Europe.